I want to go ahead and bring on my third guest for the show. He is a regular contributor here to the Jamie Meloni Real Estate Show, Bill Lavender. He has over 30 years of experience in financial and credit businesses, and it was 15 years ago that he started his company, Credit Restoration Services. Bill has a strong financial services background, having owned a mortgage company for many years, which gave him the time to become very familiar with the requirements of various loan programs. During that time, Bill became a financial planner and investment advisor. Bill's specialty is helping first-time homeowners qualify for a mortgage to buy their first home. Bill, welcome to the show.
Glad to be here. Good news. The doctor is in.
And we were expecting you in last week, but you had an unexpected surprise, correct?
Yeah.
What happened again?
My daughter, Bonnie, up in Tennessee, had her first child, beautiful baby girl, Esther Grace, and we welcomed her into the world.
Well, congratulations on that. Yeah, I expected to hear from you at the top of the hour last week and didn't see you chime in, so I got a little bit worried, but, definitely a welcome surprise for you, so congratulations.
Thank you. I was up all night.
So what do you got for us this week? I know we were talking off air a little bit about some of these credit companies out there and how they're working over the consumers. Let's talk a little bit about that.
Well, first of all, a lot of folks out there do have less than perfect credit, bad credit, and they're trying their best to avail themselves of whatever resources they find, either by internet or television. There are a number of huge national multi-million-dollar companies who are really scamming the public. Now, they're perfectly legal in terms of following the law. There are no legal violations, but all in the world they do. These are companies like Lexington Law, Credit Pros, and many more. All in the world they do is file disputes against your negative accounts in hope that somehow it falls through the cracks and by accident they get it taken off your credit report. And it's just a very, very dangerous practice, because if you've got a credit card and you just flat out didn't pay it and you file a dispute that says, in essence, it's not mine, first of all, that's a lie. It's deceptive. Mm-hmm. It's manipulation at its best, actually, and it's fraud at its worst.
And also, this can come back to affect getting a mortgage and stuff if you have disputed accounts, correct?
Correct. About 3 years ago, FHA, realizing such an epidemic, basically came out with a rule that says if you have a disputed account, it is an automatic denial for an FHA loan. So, and then all the others have followed suit, USDA, VA, and conventional lenders. If you've got a disputed account, you're not going to get a loan.
Now, do these people explain to their clients when they come on how they're going to repair or fix their credit? Or are they kind of like, pay me the money and this is what's going to happen?
Most of them operate through massive call centers. They read off of a script like any other call center. All they're going to tell them is, hey, we do great work. We're going to dispute these accounts. We're going to get them off your credit report, and you're going to be in great shape. All you got to do is pay us $100 a month forever.
So how is your service different? How do you actually restore somebody's credit properly?
Well, first thing that you do is I tell people I'm Dr. Credit because I'm going to give you a thorough diagnosis. I'm going to look at your credit. I'm going to tell you what's wrong with it. I'm going to tell you what's right with it. I'm going to diagnose, create a plan to effectively get your credit to the goal that you've established. If it's an FHA loan you want to buy a home, I know what those requirements were. I was in the mortgage business a long time. So I know what your credit has to look like, and I'm going to institute practices and procedures that are going to get your credit to look how it needs to and have the numbers, the scores as well.
So your service is more of like a consultancy.
Yes.
Actually, it's not kind of sign up and I'll take care of it and I'll call you in 3 months. I mean, you got to work with you and everything. You got to do what you tell them to do.
Absolutely, just like you'd work with a doctor. Create a plan, work, monitor it, and I'll help them do the paperwork they need to do if there's some to be done. If there are disputes that are legitimate, for example, if you really don't owe that money, I'll file those pieces of paper for you. I'll help you get that cleaned up.
Now, what are the most common problems that you're seeing with people? Is it usually just late payments, or is it, are we seeing a lot of foreclosures on these credit reports? What are you seeing?
It's a smorgasbord. I've got people with short sales, foreclosures, people that were late with some car payments, had credit cards, credit accounts not paid, and medical collections. Medical collections is becoming a very big thing as well.
Bill, I was wondering, what would you do in the instance that someone has credit card accounts not paid? The example that you mentioned to us, what's the thing to do for that? What would you do?
Okay, the quick answer is that 35% of your credit score is based on delinquent accounts. Not do you have any, but how old are they? So if they're pretty old, 3, 4, 5 years old, they've already gone past the legal statute of limitations. I'm probably going to try to do nothing for the time being, because paying those off, by the way, if they get updated, can drop your scores all over again. So depending on who the vendor is, what the nature of it is there's not a very quick answer. You don't just knee-jerk a reaction and say, okay, let's go after that one. Let's see how it's going to affect your score.
So it's a lot more complicated than what those companies are coming with the solution that they're coming with is not really, it can actually damage the credit score of the client.
Absolutely.
Is that what you're saying?
Yes, okay. Because let's say you're trying to buy a house, FHA, for example, if you've got an older credit card that just wasn't paid, but we can strengthen your total profile and scores, they may not require it to be paid off. So you have to know what you're doing.
Now, a question I get asked a lot is the difference between having a foreclosure and having a short sale on somebody's credit. What are the effects that you see on a person's credit between those two different things?
Well, first of all, we recommend short sales. If you're up front of the situation and you're trying to decide what to do, always a short sale, because between you, your realtor, your attorney, you can negotiate and pretty well control what happens as far as the credit. Credit is going to be damaged about 100 points or so, and there's going to be a waiting period of 2 to 3 years.
100 points for a foreclosure or for a short sale, or are they both the same?
Both about the same.
Okay, so both of them impact the credit score about the same, because I've heard different things from different people. And
about the same.
So about a 100-point hit from before you have time of short sale. So very good.
But the good news is, as it ages, the impact is less on the score. After you get past a year or two, maybe 50% of what it did at first.
Yeah. Some very interesting information. Got to take a quick break here, but stay tuned. I want to talk with Bill a little bit more here after the break about some of these other sites like Credit Karma. So if you're just tuning in, you're listening to the Jamie Meloni Real Estate Show here on 1250 Wins WHNZ. Back in a moment. Roofing.
You're listening to the Jamie Meloni Real Estate Show with local expert Jamie Meloni. Now, here's Jamie.
Hi again, everybody, and thanks for tuning in here to the Jamie Meloni Real Estate Show here on 1250 Wins WHNZ. And again, you'll find this show on every Mondays at noon, so please tune in as this show aims to become your information source for the Tampa Bay real estate market. We're talking with Bill Lavender, credit specialist and expert contributor here to the Jamie Meloni Real Estate Show. And I want to continue the conversation with him and talk about some of these websites that you see all over the television set, creditkarma.com and freecreditscore.com. Tell us a little bit about those.
Well, I advise everybody to stay off of those sites. I'll give you an example of Credit Karma. You have to ask yourself a basic question. Why would a company spend millions of dollars on primetime TV ads to give you something? The answer is a very simple one. They're a marketing company. You have given them freely all your personal information, your social security number, etc. They are going to sell you to whoever wants to buy you, lock, stock, and barrel. Any, telemarketers, whoever, if they want to pay the money, they can get your information. That should scare you to death. And it's not a credit bureau. I don't know how they concoct their score, but it doesn't compare with reality.
Now, there are a number of different credit agencies out there as well. Is there any difference between the different credit agencies in terms of, how lenders view them and everything? I mean, or are they all kind of...
No, there are three: Equifax, Experian, and TransUnion, and they're like the difference between cars, Toyota, Chevrolet, whatever.
Mm-hmm. Dr. Credit, I was wondering, I've heard that I use my American Express a lot, and I do not use my Bank of America credit card. And I've heard that my American Express credit card doesn't help me to build my credit score as well as it would if I was using my other card.
If your American Express is the gold card, which requires payment in full in a month, it helps your credit some, but not a lot, because it's basically a cash card when you get right down to it. You're settling up with them in a month, roughly. Now, American Express does have other cards, like the Delta Sky Miles card and so forth, that are just like any other credit card, and they're fine. What you're trying to do is establish a payment plan, pattern of paying everything on time over a period of months. That's what builds your scores.
So not paying off my credit card every month, but paying it later?
Yes. What I tell people to do in general is get a Visa, MasterCard, or a card that allows payments, and keep a low balance on it. That's one key. 10 to 20% of the credit limit, and pay monthly payments every month. That's the way to maximize your credit point potential.
And then, so a bank, like Bank of America, would be a better credit card. What about credit unions?
Credit unions are the same if it has a logo of a MasterCard or Visa on it.
Okay.
Yeah, I was just looking over the breakdown of how a credit score is comprised, and the biggest one, what you mentioned earlier, 35%, is the payment history. So that's obviously something that you got to pay the most attention to. 30% coming in at credit utilization.
Yeah, that's the credit cards. 30%. That's 250 points out of 850.
And then what, 15% is the length of your credit history. And
right,
then
the older the better.
10% the type of credit used. Talk a little bit about that.
Type of credit means a mixture of credit. You don't want just one credit card or one car loan. You want 3 to 5 accounts. You want an installment loan like a car loan, and then you want 2 or 3 credit cards.
Is a car loan better than a car lease?
In terms of credit, no. They have the same effect. Now, as far as yourself, I don't like car leases because you don't own anything. And if you have problems with it, you can't refinance it. You can't refinance a lease.
Now, the last component is something I hear all the time in this business. 10% of your credit score is tied to recent credit searches, and people always say, I don't want to pull my credit again. It's going to hurt my credit score. Talk a little bit about this.
Okay. You're going to get 2 to 4 points off every time somebody pulls your credit for the purpose of granting a credit decision. So a typical example, you go to a car lot, they pull your credit about 10 times, you've just lost 20 or 30 points. Now, there is one exception. If you're having a mortgage report pulled, you can have another one pulled in 14 days and not affect the score at all. But with that exception put aside, you don't want people checking your credit. You don't want to give that information out.
So it would be just one more time. So someone pulls up the credit report for a mortgage, and then within the next 14 days is as many as possible, or just one?
Yeah, it can be multiple times, as long as it's in that short window of time.
This is great to know, Bill. This is great to know.
So that's the exemption is only for mortgages, though? If I'm shopping for a car, I'm not getting that same exemption?
No, you're not.
Okay, so that's something I misunderstood. I thought if I was shopping for a car, I could go, and it had that same, but that's strictly for mortgages.
No.
How quickly does the credit score rebound from that? Let's say
12 months.
12 months just to recover from a credit search inquiry?
Yes.
Well,
that's a sacred cow.
Dr. Credit, what are your charges, please?
I charge $200 for comprehensive evaluation, either in my office or online or however you want to do it. And that evaluation includes a plan that's created for you.
How long does it last, like on the phone or the meeting at your office?
Up to 2 hours.
Okay.
Then I charge a $6.95 comprehensive fee to work with you over a 12-month period of time.
I think the fees are pretty reasonable because I've talked to a number of credit repair specialists, and I've seen them upwards of $1,500, $2,000.
Oh, yeah.
I had $3,000 before.
$3,000. Yeah. I mean, your fees are very reasonable and
Mm-hmm.
everything. So, I commend you for that and everything. So, I mean, but can you guarantee any type of success, or you really can't, right? I mean, you're upfront with people, right?
It's to be frank with you, it's illegal to guarantee in this business. But what I guarantee people is like a doctor. I'm going to give you my 30 years experience, training, what have you, and everyone, without exception, has been helped who's availed themselves of my services. I have a Central Florida home builder who won't use anybody but me because we put a few hundred people in their homes.
Well, a lot of great information here. We've got about a minute left here in this show. Real quick, Bill, give out your website information and contact stuff.
Website is creditdrbill.com, creditdrbill.com. Telephone number, area 655-945-9451, 813-655-9451, or you can go to email creditdrbill@gmail.com.
Well, hey, a lot of great information, and always a pleasure having you on the show. Thank you very much, Bill.
My pleasure.
And if you didn't catch that information, you can always find him up on the website, TampaBayRadio.com. That's the show's website. He is up there under the expert contributors here to the Jamie Meloni Real Estate Show, and comes highly recommended by me as well. So if you're just tuning in, you've been listening to the Jamie Meloni Real Estate Show here on 1250 Wins WHNZ. And again, you'll find this show on every Mondays at noon, so I invite you to please tune in, as this show aims to become your information source for the Tampa Bay real estate market. Hope everybody has a great week, and I will see you all back in here next Monday at noon here on 1250 Wins WHNZ.